Hello everyone. The topic for my video presentation is issues in banking sector in India. Now India currently faces numerous problems in the banking sector, but I'm going to talk about perhaps the most important and the most severe problem that India faces in today's date. That is the twin balance sheet problem. Now India being such a vast country, they've had numerous policy changes and similarly a lot of banking reforms in India. The twin balance sheet problem of India itself has two main problems. The first one is the over leveraged companies. Now, these are the companies which took a lot of loan from banks but are now currently not able to pay their loans back to the bank and are currently defaulting the payments. The debt accumulation on these companies is very high and thus they are unable to pay interest payments on loans. Currently, 40% of the corporate debt is owed by companies who are not earning enough to even pay back their interest payments. In technical terms, this means that they have an interest coverage ratio of less than 1. The second problem, in consequence to this, is the bad loan that has accumulated for the banks in India. The public sector banks are currently facing this problem in a major sense. The non performing assets or bad loans of the banks is 9.2% of the total banking system of India. It is even as high as 12.1% for public sector banks. Banks are very much in trouble because of this, as companies fail to pay back the principal or interest. Now, let me talk a little bit how this problem started, the origins of it. So, the origin of the twin balance sheet problem can be traced back to the 2000s when the economy was on an upward trajectory. Investment GDP ratio was reaching over 38% in 2007 2008. Due to such a boom in the economy, even the firms started taking risks and moving away from their conservative debt equity ratios and leverage themselves to take advantage of the upcoming opportunities that this upward trajectory showed. But global financial crisis of 2007 and 8 had an adverse effect on India as well. It reduced the growth rates and thus revenues from these investments. Firms that borrowed domestically suffered when RBI increased interest rates to avoid inflation and increased the financial cost for these firms. Thus, basically, higher cost, lower revenues, greater financial costs all squeeze the corporate cash flow for these companies, leading to NPAs in banking sector. Now, let me talk a little bit about why this problem is extremely severe in the Indian scenario. For this, you have to understand that for any economy to grow, its banks have to be stable. Plus, its companies have to keep planning new investments and projects. Back in February 2016, the Indian banks reported that the amount of bad loans exceeded the total interest they earned as operating earnings. This makes banks very risky. If depositors somehow start withdrawing money, a bank could easily shut. At such times, because to avoid this, the banks start lowering the amount they tend to lend to the companies. This means the new companies that want to execute new projects or investments would not have access to adequate funding. Lower investments have been the key cause of India's slow economic growth rate in the past decade, as we all know. So, this could potentially mean that if this problem goes on any further, it could consequence into failing of the whole Indian banking system, and because of that, no new companies or projects will get funded through the banks. Now, since we know how severe the problem is, government has also tried to solve this problem over the years. Let me talk a little bit about all the possible solutions that government has tried and what is the way to look forward to solve this problem. Now, some of the solutions that Indian government tried to resolve this problem are as follows. The first one was the strategic debt restructuring scheme. It was introduced in June 2015, under which banks could take over firms that were unable to pay and sell them to new owners. But the problem with that is that by December, only two sales have been materialized, as many firms remain financially unviable and nobody is willing to buy them. The other is doing asset quality review. The RBI emphasized this review to verify that banks were accessing loans in line with RBI loan classification rules. Any deviations from such rules were to be rectified by March 2016. The other one, very promising, was setting up of private asset reconstruction companies, also known as ARCs. Now, the functioning of ARCs is such a way that ARCs acquire NPAs from banks or financial institutions and try to resolve them. ARCs are a product of and derive their asset resolution powers from the SURF-AEC Act, which basically states that bank can take properties from the firms and sell them to uh, return on their loans, get return on their loans. India has till now pursued a decentralized approach, you know, where individual banks have taken decision on its own to resolve their NPA problems. But this approach has not resolved the problem yet. And time has now come to create a centralized agency called Public Sector Asset Rehabilitation Agency, also known as PARA. The good thing about PARA, or the reason I feel that it would help in resolving the issue permanently, is it not only counters the NPA problems but also bad debts of the company, thus resolving the twin balance sheet problem itself. It could solve the coordination problem since debts would be centralized in one agency. As we know that the decentralized way did not work out. Para would purchase basically loans from banks and then work them by different ways, like converting debt to equity and selling the stakes in the auction. Now, after these bad loans have been taken off from the public sector banks, the government would recapitalize them. That is the most important step. The Union Budget of 2016 has also allocated 25,000 crore rupees towards recapitalization of public sector banks. How the para would be funded is through government. Government funding in the form of securities is the way for the funding of para, and RBI may transfer some of the government securities to para. The rest of the money may come from the capital markets. So this way, para would be able to buy those NPAs in the first place. In conclusion, I would like to say that the twin balance sheet problem of India is a major problem that Indian economy is facing today. There is no point in delaying this problem because the delay is very costly for the Indian economy as impaired banks are scaling back their credit while the stressed companies are cutting their investments. The time has come to adopt the strategy that East Asia adopted during their crisis period. The centralized agency in the form of para would allow debt problems to be worked quickly and swiftly. The time has come for India to consider the same approach. Thank you.